Good afternoon, everybody. It is February the 15th, and this is market session recap. Amazing day today in our Discord. We made some absolute bangers, and we actually called the top from pre-market. So, if you're new to the channel, welcome. Please consider hitting the like and subscribe button. It does me a world of good in terms of my channel, and it also helps other people like yourself view this content. And so, if I'm paying it forward, all I ask you to do is pay it forward so other people can have the same benefit. So, with that being said, let's dive into today's action. So, the reason why I had this as the draw today, which again is consequential encroachment of the weekly gap, which is this pink line up here on the hourly, is that it tied in nicely with this hourly consequential encroachment, right? And so, if we start the day here, right? So we're going to start on the 9 o'clock. We're going to skip this pre-market, okay? We'll get into the juicy stuff. So this pattern here is a institutional entry order drill on the hourly, right? And this is a very bullish market maker buy model. Okay, so we saw the exact same thing yesterday. So if you look at my yesterday's recap, you'll see exactly the same setup. And what happens is the previous hour's low gets swept, and you can see that this candle here on the hourly, the following candle just ticks below it, right? And that is this low here on this candle, the 1 minute, is that candle, and this low is that candle, right? So it sweeps it, and you get this immediate rejection candle, right? What is it doing? It's taking all of the liquidity, all of the stops which reside below here, okay? And it's also painting a picture to retail that we're heading low, right? So when we see this immediate rejection candle, and as you all know, I like it predominantly on the 15-minute rejection candle, we like to see price return into equilibrium for a move higher, okay? So as soon as we see this, I'm thinking the market is looking bullish, okay? And my eyes are immediately drawing on where could price run to. And so that's where I got my initial target. And I'll show you standard deviations in a minute, how I dialed in my targets. But for now, that was my draw on today. And so I had a bullish mindset going in for the entire session, okay? So in the pre-market, we get these relative equal highs, which for me was suspect, okay? And then what I'm looking to do is create standard deviations to pick immediate entry points. So as soon as I'm seeing this market maker's buy model, an institutional entry order drill, right, on the hourly, I'm looking to see where price can run to. And the first target is obviously taking equal highs, right? So how do I pinpoint that exactly? I see these equal highs here, but where's price likely to reach to? So this is where we can start looking at standard deviations. So I'm looking at this swing low here. So this is an interim term low, and I'm taking the short-term low is shoulder essentially and measuring that out, and I'm looking for the first level above the highs, and we can see it here that we had one time standard deviation, okay, and that's this line this runs across, okay. Price then creates this institutional order drill on the hourly and then dips down slightly further. We then move higher and we get so I've got this on, right? So this is already framed, so I've taken no trades yet. I can then see balanced price, right? So we see this up close candle followed by a down close candle, which is exactly the same height. So for me, I draw that across my chart and I put equilibrium across it, right? And now I'm looking at this as a reference point. This is, for me, quote unquote, support, right? So I'm then looking for following swing lows. We have a swing low, we have a long-term low, and then we have another short-term low. So we can measure that and see if we have confluences. And what do we get? We get a confluence at half a standard deviation. So we can plot that line, and then that is what I'm looking for price to reach to. It comes all the way back down into this balanced price range, wicks down slightly into this fair value gap, and then moves higher. And what's it hit to a tick? It hits to that 37.25. So if you go onto my Twitter, you'll see that this is the trade I took today in the morning session, and it was a very good one indeed. So we then had price move up to 41.45, which coincided with I believe it was the Dixie entering its new weekly gap, right? But I can't remember off the top of my head. But anyway, it drops down, and this is the next piece of price action I want to pick up. Okay, so this is a broadening formation. Okay, so it's when you have a real tight period of consolidation, and then we see this sort of expansion within a range. What I'm looking for is a market structure break within inside that, and here we can see we've got it. Price then returns down, sweeps the lows, and moves higher. We can then look for retracement for the post-lunch run on our target, right? And so we had this balanced price here, okay, so we can see this fair value gap that's traded down and it's left open, and it's traded back through left open. For me, I love these, okay, and I'll draw that across my chart, and I'm looking for price obviously to return back into that before moving higher. It does so, and it carries forward, and then we get this breaker block which forms on this candle here, the 12.54, and that then turns into support. So that could have been another entry for you to go long once we got past that breaker block, with the ultimate target of initially taking out these highs but then running on to our target. So if we just take this off briefly, so I'm looking for what could price run to, okay, what could price run to, and I was looking at these equal highs over here, which would be an immediate target, right? which are below my ultimate target of consequential encroachment on the weekly, which is this pink line, but this is my short-term target on this run higher. Okay, so I'm looking for the first standard deviation above these equal highs, right? So I'm looking at this price leg here, and I'm expanding it out. And what did I get? So I had 57.25. Price ran to 57.25, and that was my trade that I took in the PM session. So if I just bring this up here, I'll just show you. So there you go. I got in here at 49.50 and I got out at the sort of 60 level. So it's a nice, no, sort of nice 10-handle trade, right? But this is obviously the fake out. So this is the fake. This is trapping retail into go low. But what's actually running back to? So this is running back to the new day opening gap, right? Which is sort of between at the end the close, which is at 5 o'clock, and then opening up at 6 o'clock, right? On Tuesday. Okay, so it's the start of today. So it's a new day of the gap. It comes back and retests that day before expanding higher. And so what we're looking for is price to move higher, right? Ultimately, it's going to move higher. Okay, so we're looking for a piece of price action that we can base a trade off. And if we didn't catch this test of the new day opening gap, we could have waited for another signal. And for me, it was this balanced price range in here. We take equilibrium of that, wait for price to get above it, come back, retest the median point before expanding higher. Okay, and then it comes back, fills back into this order block, and then we get that expansion move higher. So that it almost top ticks 61. So if you're in my Discord today, you would have known that I had this as the draw day. Oh no. And my mic died halfway through that. Absolute nightmare. So yeah, so I hope you found that useful. It's a bit of a short one today. Well, it's a shorter one today, but there's a lot of information then and some good information surrounding standard deviation. So as always, feel free to join our Discord if you're just stumbling across this YouTube channel. All the links are in my bio. So yeah, I look forward to seeing you on the other side. And until next time, take care. Bye now.